Hello and welcome, friends, fellow traders, and investors. My name is Lloyd Logan Boucher from On Point Stocks and Options Trading. You can all call me Logan, and this is your midweek market update video for October 13th. All right, so I hope everybody had a great weekend and a great week starting here. We can all say Happy Thanksgiving to the Canadians. I'm a Canadian. I think I had like three Thanksgiving meals now, two at my place and with one with friends, one with family, and then one at a friend's place with their friends and family. So we've eaten a lot of food in the last few days. Definitely needing to get on the treadmill. But everything's been going great. Week is looking good. Everything's kind of moving exactly as we expected as per our Sunday's video. And so let's get started by digging into the indexes real quick. All right, here we go. Looking at the SPX. Let me magnify this real quick. SPX broke out of that consolidation as we had discussed. When it breaks over this resistance point, we're going to have a pretty powerful move. It got pinched between the resistance point and our confluencing moving averages. It set an uptrend, broke to a new high, and then on that retest, man, did it ever shoot up. But I discussed on Sunday about how this thing had gapped up too much. And it was gapping up on Monday with a really extended move. And that's what you call an exhaustion move, right? People chasing prices higher. So you got to know there's going to be some sort of pause, a break of some sort of rest in between that's going to give the buyers a chance to catch up, or some of the buyers a chance to take profit as well. And I know I wouldn't expect it to be going short here at any time, but it's got to wait for moving averages to catch back up if it's going to carry this type of momentum. That's what's driving it is algorithms. So I would expect the S&P here is going to either pull back slightly or consolidate for a few. We've got an inside day, which means it's probably going to be choppy tomorrow, and we'll see what happens with that. So nothing's changed. It's in an uptrend, just like the Nasdaq. Now I was long the Nasdaq. I mentioned that before from somewhere over here, and I took my profit off almost like I'm not going to say it was by sheer fluke, but a half an hour before the close. So I pretty much got out while it was near its top. Um, and again, that's not anything to do with skill. That's because I was actually hanging out with the kids and we were outside playing. And I came back in, and it was a holiday because it was a holiday Monday. And I came back in, and I looked at the market and I'm like, oh, look at this move. I'm going to take profit because it's likely going to consolidate tomorrow, anyways. And so I did. It just was good timing. But in the end, it actually is going to consolidate. It was expected to consolidate today, maybe another day, maybe a slight pullback before it continues on. But nothing's changed. Still in an uptrend, just way too far from moving averages. It needs some time to pull back or consolidate, go sideways a ways until it catches up with the moving averages. Dow Jones, again, nothing is any different except for this is not an inside day. This one actually did break lower on the downside and closed near the low of yesterday's close, but still in an uptrend, nothing changed. And the same thing here with the Russell basic uptrend. It did close below the low of yesterday's candle, but it's still in an uptrend. So we'll probably expect there's going to be some sort of correction or at least a hesitation to hold it in a pattern till the moving averages catch up, give it some momentum, let everybody work out their buy and sell orders, and then let it pick up pace again. So everything is still pointing to the market going higher. It's still looking bullish. Take a quick peek at our XLs. You can see right here the XLY, the utility, the consumer discretionary sector, held really nicely. Again, an inside day close, but still a neutral candle, not a bearish candle, but held up really nicely. That uptrend is now fully intact. And we have the tech sector, which is kind of hanging back a little bit. And this is where the selling really took place. You can see that that black candle, it closed down near the low. It's still an inside day, but it closed down near that low on the tech sector. So it's one of the ones that, you would have expected that big tech would have driven it, but it actually wasn't the driver of the market this time around, which is really interesting. We're going to find out about that. Financial sector, on the other hand, did look a little bit weaker. So it had never gotten past this pivot high up here, and it came back. I guess I could probably draw that in to retest somewhere around those pivot highs. It never really got up there before it's pulled back. I would expect that you'll probably see this thing pull back somewhere into these moving averages and that trend line it's going to need to build up some momentum in the financials if it's going to carry this kind of distance. And we haven't seen that yet. So I'd expect the financial sector will probably be pulling back somewhere in this range. XLP, which is consumer staples, actually broke out of that holding pattern it was in there for that 2 weeks and rallied up really nice. Closed inside day, very close to consumer discretionaries in appearance, but it didn't make the all-time highs. There's still going to be some overhead resistance in the consumer staples right here, so we'll have to keep an eye on that. I'm not sure how this changed to percentage. I'll have to change that back. Utility sector broke up once again. It's really pushing nicely, like it came off this bottom, and it's just really been pushing and pushing and pushing. We did have an open lower from yesterday. It did push down, but it was followed by buyers. So people are back into utilities again. This is the strongest of the sectors right now in terms of percentage wise, and that's really because there's more of a flight to safety. And when people go into a flight to safety mode, they tend to move into utilities and to move into healthcare. Although healthcare is a little bit skewed right now because of this coronavirus, it had a really nice push up. It retested that high once again, and now it's back down, pushing down. Small corrective move just off that pivot high right there. So that's okay. That's expected. Nothing has changed. Everything's still in an uptrend except for oil. Once again, oil being the laggard of all of the sectors of the market, not oil, sorry, energy sector being the laggard of all sectors of the market. It should pick up a little bit as people are going to start using a lot more natural gas here for wintertime for heating. But what ended up happening is we did kind of buck that trend. We came right up into the moving average, the 21 moving average. It broke the trend line into the 21 moving average and it began selling off again. And what we're seeing right now is the US dollar is also falling pretty sharply. So as oil's going down, as US dollar is going down, you find some strength in oil. You should find some strength in oil, but you haven't. So that's really kind of showing to the negative or to energy sector, commodities, but you haven't. So it's kind of showing to the negative, to the negativity against the energy markets right now. Basic materials, we discussed this on Sunday. We talked about how we got these two dojis in a row and how that usually is going to lead to some sort of a reversal. It came right up into that resistance point, and what happened? It did sell off. It didn't just sell off on Monday, it actually gapped lower and closed with the doji candle on Monday as well. So I would expect the basic materials is going to be pulling back uh, some more before it starts going back up. It's not quite done this correction yet. And we've seen something similar in industrials, although it did hold its own on Monday, but it did gap and then sell off on Tuesday. So as far as the sectors go, we're looking at the energy sector as still potentially for rolling over. It is the weakest of the sectors, and the healthcare is the strongest of the sectors as it stands. You could also compare the healthcare sector with what we'd call consumer discretionaries. They're both looking pretty solid right now. And that'll be it for sectors. Now, watch for the rotation of capital. We're getting closer to elections. We're only, I think, a few weeks off now. And you may start seeing more money rolling into utilities, into healthcare, into consumer staples, off of the high flyers. Especially if policy talk comes out about breaking up the big the big companies like the big, tech companies and things like that. That will have a definite effect in tech sector. So we really got to watch elections closely. The problem with elections is this: nobody knows who's going to win. Doesn't matter what they say, what the polls say. Usually it's the opposite of what everybody expects. And that's what creates the volatility. If you remember the Brexit vote, unbelievable. The mass of the move was just unbelievable because everybody said that they were going to vote to stay. And then when the result came out that they voted to leave, the drop in the pound was immeasurable. It was incredible. It was a phenomenal day for trading. But the last election, same thing again. Everybody said Hillary Clinton was going to win. All the polls said Hillary Clinton was going to win. And in the futures market, the futures sold off massively. They limited down overnight prior to the close of the election based on a Hillary Clinton win. And then when the numbers came out and Trump won, the market rallied, and it rallied 15 months straight without making a lower low, which is unprecedented. So the policies that the president or the running presidents are campaigning on have a great effect to what happens in the markets. And so be aware of what the policies are and really think logically. Take your bias out of whether you like a person or don't like a person, because that's irrelevant. It doesn't matter who the president is in the United States. It's all to do with the policies. And if that policy will affect the market negatively or positively, raising taxes good or bad for the markets? Bad. Um, you know, uh, will think about it. If you start de-energize, removing energy exports from the market, would that be good or bad? It'd be bad. Good for the energy prices, bad for the oil markets in the United States because that means there's going to be less oil to sell to other countries. Different policies will have different effects, and just think about it, everything, and ask yourself, would that be good or bad for the economy, so you can make a better educated decision on that. Okay, let's take a quick peek at our setups from Sunday. So Sunday setups, where's Sunday setups? Right here, cuatro. All right, so Sunday we had identified 4 chart setups. And again, I want to be really clear before we start going into this part. Guys, remember, everything I'm doing in here, guys and gals, remember everything I'm doing in here is for educational purposes. I'm just really trying to share my knowledge and to help people fine tune their trading skills. It's not anything about I'm suggesting you should take these trades. I'm recommending these trades. These trades worked out, and so you should get similar results. Not in any shape, way, or form. There's so much more to trading, as you probably know or are learning, than simply getting in and getting out. It's all about risk management. It's about understanding um, how your profit targets are going to be set, identifying the economic events and the news in the markets that are going to affect your positions relative to correlations with index markets and relative strength to other sectors and companies in the same sector and industry. There's so much more to what goes into picking charts than simply one thing. So remember, all of this is just for education purposes, and I feed little pieces of information. I hope you learn how to apply it to your trading and makes you a bit better, just a little bit better. It's 20 minutes twice a week to make you a little bit better trader. And I mean, that's a pretty small investment if this is something that you want to do for the rest of your life. Whoops. So I hope it helps. And if it does help and you like it, please don't hesitate to hit the like button and also, subscribe or share these videos on your Instagram, or I don't even know how to do that, on your Facebook, so I get more followers, and that's good. That means I can help more people, and that would be a blessing for everybody. Awesome. Okay, so let's get started. Um, let's start talking about Lulu here. Now, full disclosure, I got in this trade. I was in this trade somewhere back here at 342 area. I actually exited some of this today. And it's just a really, really nice push up. There was a lot of a move. I was expecting the market was going to hesitate today, as it is. And, there's always the risk that when it hesitates, there could be some selling that takes place and it pushes back. Didn't want to give back a bunch of money, is really what it was all about. Okay. And I'm okay with that. When it's uncertain times like this, I'm okay with getting out a little bit sooner than later and locking in some of those profits. So this trade, yep, this is still in play. Nothing's changed. It had a good close, a little bit of a sell-off, but still a good close, pretty solid, still trending and following the trend line. We expected it was going to come back to the moving averages. As it did, it came back and it retested that moving average, the 50, the 20, and the 8 confluencing area, along with the trend line, and it launched. And that's kind of expected. It may go sideways for a little bit, and it may continue doing something like this, which will give more entry opportunities. And at this point, you're probably becoming a skill level, if you've been watching my videos from the beginning, that you don't need me to tell you that there could be an entry opportunity somewhere in here tomorrow. you know, it's possible. If you're out, there might be a pullback and there might be another entry opportunity. So hopefully you're getting to that level that this is starting to help you and you're starting to be able to grasp, both my thought process, but also how the markets move. And really remember, I'm right and I'm wrong. I'm right 100% of the time, 50% of the time, right? No, not exactly, but it does help when you start making decisions and practicing and training your eye. And this is a great way to do it, is to take these trades on simulated account. Set these trade ideas up on simulated account and practice them and monitor your results, and put 2 contracts on, so you can take one off at half price, when it's up your $10-15, and take the other one off at the expected target, and see how that manages out for you. All right, let's take a look at PayPal. I'm going to enlarge this for you here. PayPal looking great. Again, came in, had a really nice entry right into that action box. Now remember how we kind of put that action box a lot bigger this time? Because I was expecting it was going to get up above this trend line, and it did. It doesn't always happen this way. Remember, I think we had Merck or something one recently that didn't. It actually opened up below the trend line and the resistance point, and so it was a no trade. But it got back above and it came back into that action box. It dipped in perfectly. An aggressive entry on this trade setup would have been somewhere in around here on the touch of that trend line, and a more conservative entry on this setup would have been when that candle turned white. And so it was two fantastic opportunities. If you got in, if a trader got in around 97.50 and it's up at 207, I mean, they're up $10 on this trade in 2 days. Not a bad idea. If you're trading with one contract and that's a 50 delta, that's a $500, $600 return rate there, probably more with the delta effect or the gamma effect. If you had a couple contracts, it could be obviously double that. If you're in the stock, obviously it would be relative to the amount of shares you carry. But this still has room to move. So there's no reason to really be out of this. Even though, again, the market could hesitate, this really bucked the trend. Look at how strong that move was. So we've expected area at 112.50 area that we think it will get to. Could pull back, could do a lot of things in between. Always manage risk and manage trades accordingly. All right, the other one we looked at was Apple. Apple gapped clear above our action box. Wasn't too pleased with that. I thought it might gap up and then wick back and then take off. It did pull back today, but it's still holding. So maybe in another day or two, action will pull back. This is still a full-on trade. There's nothing wrong with this trade. If it gets back here, I'm still going to look at Apple. In fact, I want it to pull back. I like it when it pulls back. A lot of times stocks gap above my action box and take off, and I don't get those trades. It's not too often that I actually jump on them when they're that high. And if I do, I move my stop up. I don't just get in them and put the stop down here. Um, but I would like to see a pullback on Apple. That would make me very happy because I think there's pretty much free run all the way up here. So see about Apple. It's not in play yet. And the last one here is Dish, and Dish was the short setup. And Dish, for whatever reason, has just decided that this is going to be, putting in a slight bottom. Gave a strong rally up, no trade action there. And then on this day, it did give there was actually a sell signal. So it did give a sell signal. Again, a more aggressive entry would have been somewhere up in here. A more conservative entry would have been when that candle turned black. And now it's gone against the trade. So not fully out of the woods yet. There's still some potential here that it could push back down, and this might just be a 2 candle bounce or a 3 candle bounce before it goes lower. Let's hope it doesn't get up to that 21 moving average. If it does, I would think that's too much risk for most people. And it might even come back down once it gets there, but that would just be too much risk for most people. So let's hope it doesn't. Let's hope it rolls over tomorrow and continues a bit lower. I'm not overly concerned about poking through the trend line. I'm more concerned about if it decides to hold on that 8 moving average as it's now confluencing, pushing up, and it's converging here with the 21. So those were the 4 setups from last weekend. Let's quickly take a look at the economic reports before we go into our setups going for the rest of the week going forward here. Economic reports, not a whole lot big news came out. CPI, everything came out in alignment with what expected. They're wanting inflation. The Fed has mentioned how they want there to be inflation and to continue with growth and inflation. And they're going to I think they're going to try and inflate the debt away. I mean, it's just ridiculous, but it just means prices of things are going to get more expensive for us all, guys. PPI came up, same thing, 0.2%. So they're looking to try and increase that, obviously. What we got going forward right now is on Wednesday, not really a whole lot PPI coming out. We've got the manufacturing numbers are going to be coming out on Thursday, and that's 5:30, and that's when everything comes out. So you got jobless claims coming out on Thursday, and then continuing jobless claims. So these numbers are, we see them every week. They're not good. 825K new initial jobless claims. We've talked about this in Sunday's video at length, and that's just a terrible number. It's 4 times higher than it normally is. So again, not looking great. What else we have out? That was basically it, I think. Friday retail sales and core retail sales. And I think that about sums it up. So not a whole lot in economic reports, although earnings are coming out. Earnings have started. Remember, I don't go into earnings because there's just so many companies that have earnings. But if you are trading and you're actually trading real money, or even in a simulated account, it's good practice. Always be aware of the earnings, guys. There's no excuse for entering into a trade prior to earnings and being unaware of it. That is just like that's throwing gasoline on a fire. It's dangerous. So one of the things you can do here is if you have this Thinkorswim platform, and one of the things you can do is you can actually click right here, go to the equities tab, and show corporate events. Where is it? Show corporate events right there. And if it shows corporate events, what it will do for you is it will show when earnings are coming out. So when's earnings for Lululemon coming out? They're not posted yet, so they're not coming out anytime soon. Earnings, this one here is showing that Apple did a 4-to-1 split, and this one here is showing, there you go, earnings are coming out on 11/5 before the market Central Time. So this is a good thing to have on your chart. So every time you're looking at your chart, you can actually identify when the earnings are coming out. So one little piece of tidbit of information for you. All right, let's get started into our setups for the week going forward. I think I got some good picks here. Now, when I was looking at the markets this morning, I was looking more to take profit on positions I had. I had some pretty nice profits in some of the positions that from previous videos that I've been putting out. And I started pulling and peeling back some of those positions. And as I was looking through new charts, it was like, man, there was a lot of real nice setups. But I didn't initiate. Did I initiate? I think I got one. Um, but everything else I didn't take, and they all looked and they ended up pretty good. So that's the way it usually works out. But there are some pretty nice setups still. So I'm going to show you guys this one. Let's start over here with NFE. So NFE, look at the trend on this thing. This is a monster. Beautiful chart. It doesn't get any better than that. The only risk here with NFE is it is really kind of extended. I mean, at every now and then you got to say, at what point is it going to be the end of the extension? But sometimes they just keep going up. A trader may have said the same thing right here and said, "Wow, look at that extension. That's pretty high." And then what did it do? It corrected back to the moving average, and then it went higher. So it's really hard to call the tops. I mean, it's nearly impossible to call the tops, especially when it's at all-time highs. So will this be the top? I don't know. I don't know this. But what I can say is that the chart setup looks really good. It did come back up to resistance, and resistance stopped it, although it didn't push it back. I'm not willing to buy it up here because it's just too much risk for the price of the stock. So what I would look for is resistance to give a pushback. Give it a pushback. Give it back into my action box. Give me a sign that I can buy at a discount closer to my moving averages so I have some sort of safety net or backstop should it decide to turn against me and I can get out of my trade. Otherwise, if it goes higher from here, I'm not really interested. Some people can do breakout trades. And if you do, you got to really trail up that stop. If it gaps up, let's just say this happens, guys. Let's go through a little lesson here. Let's see it opens up right here and it decides it starts to run up. And as a trader, you decide you want to buy it here in anticipation that it could go like this, and it could. Well, you can't buy it there and put a proper stop in place. So what you need to do at this point is you're just gonna have to, say I'm willing to get it a day, stopped out on a day trade if this thing decides to wick back down and stop me out. Because at what point do you decide that you've had enough risk? Every time entering a trade, you got to decide how much you're going to take in risk. You can't simply go in and say, well, I hope it's going to work out. And think about the gains. There's risk on all sides of trades. I always have to plan those accordingly. So NFE, I'm looking for a pullback. That's going to be my entry. All right, let's take a look at SWAV, so Shockwave Medical. This, once again, this is a really nice find. I hadn't seen this company before. I was scanning through new stocks, and I came across this, and I can't believe I've never seen it before. Look at this thing. What an incredible trend this has been on, okay? Now, it's a lower volume stock, and so it's not going to be optionable, and this is going to be a stock play, but look at this trend. Every time it comes at 21, what does it do? Launches off that 21. 21 launches. It's been holding above the 8 the rest of the time, and it's still above that 8. Now, we did kind of lose a bit of momentum in the trade. Now, if you look at the distance between the pivot low and the pivot here, pivot low to pivot, pivot low, pivot, pivot low, pivot, it's kind of getting a little bit tighter and it's gotten a little washy here. which means it may be setting up for a kind of a sideways move or a consolidation or maybe a pullback. That's why I got my action box where it is. I'm expecting that this thing could potentially give a little pullback into that action box. And if it does, even better. If I get that kind of a little pullback, maybe something like this, maybe even a 2-leg pullback, I'd probably end up getting in this area here, and maybe with a potential to add if it comes down and hits that 21 moving average. But from there, the expectation is it's going to do this. If the result is this, out. You got to have that stop loss in play. You got to be willing to get out of the trades if they're not looking like they're going to work out for you. All right, so that's the play with SWAV. So let's take a look at Spotify, oh my God. Yesterday it was a good buy, but the problem was it was still under that 50 moving average. I call this a pinch trade. So this is one of my specific type of strategies. I'm going to write books on all this stuff eventually. At least do little video lessons that I could put on my website. But anyways, the pinch trade is really when we start to consolidate and pinch between moving averages. We have algos pushing down, algos pushing up. We're coming into it, and this is just the perfect setup. So the trade setup would have really been to have entered yesterday or anywhere actually within the range of these two moving averages, expecting that a breakout to the bottom side is going to be a fail. If you're long, a breakout to the upside is going to be a win. And in this case, it won. And that was going to be the expected move because it was already low on the curve in terms of where the high range is and where the low range is. It got back up above that support line. It was trading above the 15 and the above the 21 and the 8 moving average, and they were diverging, right, while converging with the 50. So it was obvious that things were pushing higher. And of course, that's what ended up happening. So that is a beautiful result. Now, very oftentimes when you get a big sharp move like this, what happens? Big expanded range moves are usually followed by either contraction or a contraction candle. Let me get rid of that real quick. I'll draw this out for you properly. Followed by some sort of a contraction candle. And that contraction candle can sometimes go all the way back in to retest this resistance point. And at that point, when it hits that resistance point, it's also going to be coming into these moving averages. And that's what we want to see. If it comes back to these moving averages, this gives a good area of support, kind of like what we seen on last week's trades, where we had a pretty big, nice launch off PayPal and the other one, Lulu, I think it was. They came back into confluencing areas, and that's where we want to be entering this trade. So I don't want to buy it up here. I'm not interested in looking at entering a trade here. I want to enter here, or I want to enter it here, or somewhere in this area. So this looks like a really nice setup. The one possible outcome is it just simply doesn't give that pullback and it does something like this. And if it does that, then it's, let it go. You learn from it and you trade your rules, which always revolve around being able to manage risk. Last one, here we go. Okay, so this is a short. I was trying to find one short trade. Again, this was a nice setup yesterday and today. Today it did actually break below that pivot low, so it's kind of made this little bit of a support area here, and then it broke below this kind of support area. Oops. It broke below this kind of support area. So this is really encouraging. Now, I put the box up higher because once again, I understand how these short pushes work. They have a hard push down and then a deep retracement and a hard push down and a deep retracement. And we've now been 1, 2, 3, 4 days down, and I would expect there to probably be some sort of retracement back into that zone. And the reason why I like this trade is because it really broke through these major support levels. It's been hanging out against this support for some time, and it's broken out against it. So, God, I hope it retraces. If it doesn't retrace, I'm probably going to be, kicking myself. But I'm hoping for retracement because this has some serious move, some distance it can move, okay? This is a cheaper stock. It's only $9.40. You could just short it right in a cash account or margin account. But this candle here is the only one that worries me, this wick over wick candle right here. But aside from that, this could get down to $8. And that would be fantastic on such a cheap stock. That's a nice move on a cheap stock like that. All right, and that sums up the 4 charts for the week. So remember, everybody, I hope you guys liked it. If you liked it, please hit the like button. Thank you everybody for supporting the channel, and I really do appreciate your comments. For some reason, when I try and reply to comments from my page on my YouTube page, it doesn't let me reply from there sometimes. I'm not sure why. It's kind of like finicky, but I do try and reply to all comments. So thank you very much, everybody, for your support. Make sure that you manage your risk and always trade accordingly. Be careful. A lot of volatility with the elections coming up, so have fun.